Ripple is reportedly offering up to $11 billion in cash and XRP to acquire Circle, the issuer of the USDC stablecoin. But they're not the only ones in the race. Coinbase is also in talks to buy Circle, and according to multiple sources cited by Fortune, Coinbase may actually have the upper hand. This is a high-stakes bidding war between two of the biggest names in the crypto space, and the outcome could reshape the entire stablecoin market. So, why are they both fighting to get Circle? What's in it for them? And how is this going to affect us, the investors and users? Let's break it all down. First, here's what's happening. According to Fortune, people close to the matter have confirmed that informal discussions are underway for Circle to be acquired, either by Ripple or Coinbase. Earlier, Bloomberg reported that Ripple made an offer between $4 to $5 billion, but Circle turned it down, saying the offer was too low. This makes sense because Circle is targeting at least a $5 billion valuation, the same figure they hope to achieve through an IPO in the near future. But here's the twist. Ripple might come back with a new, much bigger offer. Fortune's report suggests Ripple is now willing to go as high as $9 to $11 billion, combining cash and XRP tokens to outbid Coinbase. So, why does Ripple want Circle so badly? It's all about stablecoins and market control. Circle is the company behind USDC, which is the second largest stablecoin after USDT. It's used for payments, DeFi, trading, and more. Whoever controls USDC gets major influence over one of the biggest infrastructure pieces in the crypto economy. Ripple is already focused on cross-border payments, and acquiring Circle could help it expand that goal. Ripple holds a massive amount of XRP. According to their Q1 2025 markets report, they have over 4.56 billion XRP, worth about $10.72 billion, in company wallets and another 37 billion XRP in escrow. That gives Ripple serious firepower, especially if they use some of these tokens in the deal. But don't count out Coinbase just yet. Coinbase has been closely connected to Circle for years. Back in 2018, they co-founded the Center Consortium, the entity responsible for launching USDC. Even though that partnership ended in 2023, they've maintained a financial relationship, splitting revenues from the cash reserves behind USDC. More importantly, Coinbase owns a minority stake in Circle and has a contractual agreement that prevents Circle from entering new partnerships that could harm Coinbase earnings from USDC. That gives Coinbase a strong negotiating advantage. According to the Fortune report, several sources believe that Circle is more likely to sell to Coinbase if the exchange decides to go all in, and Coinbase could easily afford it. In Q1 2025, the company reported $8 billion in cash, and as a public company, it can always raise more money through investors or stock issuance. That's a serious competitive edge. Still, Ripple has one thing that Coinbase doesn't: XRP. Angel investor Paul Barron recently said that Ripple's offer, now between $9 and $11 billion, might be more appealing if they combine XRP with cash. This way, Ripple isn't just offering money. They're also offering exposure to a token that could increase in value if XRP adoption continues. But here's a critical point to consider. Circle says it's not for sale. Despite all the rumors, Circle has stated that it is focused on long-term goals, including a possible IPO. They're not openly inviting offers. So why are these talks happening? Well, companies say a lot of things. Not for sale doesn't always mean we're not listening. It often just means they want the best possible deal, or they want to go public unless a better offer comes around. So, what can we take away from all of this? This battle between Ripple and Coinbase isn't just about acquiring a company. It's about controlling the future of stablecoins. Whoever wins this deal gets more influence over crypto payments, regulations, and financial infrastructure. From Ripple's side, the use of XRP as part of the offer is a clear strategy to show its utility, not just for payments, but as a valuable asset that can back major acquisitions. That's a strong message to regulators and institutions who've questioned XRP's real-world use. For Coinbase, it's about protecting their current revenue stream from USDC and expanding their control over the stablecoin market in a compliant, public company way. That could be more appealing to traditional investors. But here's the bottom line. This deal could shift power in the crypto space. Whether you're a holder of XRP, a user of USDC, or just someone watching the crypto markets, this story matters. It's not just a tech deal. It's a fight for who shapes the future of crypto money and how much control they'll have. So keep your eyes open. This isn't over. And like one source told Fortune, things change every week. Thanks for watching. Let me know in the comments. Who do you think should win this battle? Ripple or Coinbase? And more importantly, what would that mean for the rest of us? See you in the next one.